following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's good to be back with TFNN. Been traveling the last couple of days. Thanks for bearing with me. That is a hike from down in the middle of nowhere in the Philippines. Trust me. That's about, man, depending on how you skate back, it's I think the best case scenario might be 24 hours. You got to take about four airplanes. Good to be back though, and a lot of things have happened since we went on a trip. Here we go. Let's talk a little bit about some of the usual suspects. In Shanghai, I want to kind of point this one out. This is one that kind of like Steve Bangard was talking about. You have volatility contracting. Then you've got a chance to really look at buying some volatility. Take a look at a couple of ETFs involved in the Shanghai. You've got a profile that's just continued to edge a little bit higher, but also compress. And if you can look at a couple of instruments relative to that, I think you've got a decent play, just like we still do on the S&Ps right now. And we're going to get in that in just a little bit. But let's stay in Asia, since I just got back from Asia. And let's take a look at a couple of other indices over there. Let's take a look at the Nikkei really quick. And again, this is why I like to base some trades, bets around some of these long-term profiles. This is our weekly on the Nikkei, kind of coming off 17,122. Closed right in that noise area last week, reached a 17,140. I wouldn't call that closed above. That's kind of sitting right at the noise level on the Nikkei. So a couple indices in Asia, and we're going to go right into looking at the Hang Seng. We don't look at that much. This is something. This is the HSI. This is our weekly on this. Now, you get a weekly strong close above profiles here. It didn't even come back and retest, which is usually the strong trade. Here's the daily on the Hang Seng, kind of regulating the trade up after that breakout. But this is one that if you go to Hong Kong, it's kind of a weird little market. But you got to take a look at this relative to the Shanghai and some of the A shares on the Chinese markets. Let's take a look also, just kind of going down the list here. We're going to take a look at gold and silver really quick to catch up. Gold didn't quite get down the other day when we had the Yellen and the FOMC speak that came out. 1295.96 was where I was really looking to seriously back up the truck. Talked about not shorting this. I think that's the riskier trade, and then we just kind of came unglued on the upside after we didn't get down there. So I missed this trade. I was kind of waiting patiently for it. Sometimes that happens, and that's okay. The silver trade was actually worked out quite well, but I was more primarily interested in the gold trade being down into that 1296 area. But silver holding up before that and actually really defending those unfair highs on the weekly. Probably a little bit more attractive trade, but I don't trade silver that much, and was really hoping gold would get down a little bit lower. So here's the situation on gold now. What do you do with it? Do you buy it up here? We kind of raced above the latest defense area, 1331, 1333, being that POC that we kind of, closed below, went back and retested, and this is our weekly again, sold off below 1331. 1333 is the top of the profile also on the daily. So when we got past these areas, obviously there were some folks covering, but what do you do with it now is the big question. Again, I'm not a big fan of shorting this. I don't think gold's gone too high. I think the gold bugs will be happy soon enough with another breakout above 1367. And right now we're kind of in no man's land up here. I don't see a really cool way to play defense and get into a trade this minute. In fact, here's the 240s. I think this is a no trade right now. You've got to either wait for pullbacks into 1331, 33, 40. If you're playing a long-term trade, that's that kind of dig in area on the long side, and then you've got targets at 1366, 67, and any weekly breakouts above there, you got to look at that as support. So I've said a lot there, and right now it's kind of a wait and see for pullbacks, buying support, or buying breakouts. And you really don't have a great risk reward if you're waking up this morning attempting to trade gold. Let's take a look at silver really quick. See if we can find it. There we go. And here's that really incredibly defended area, 1860, 61 on the weekly there. A little bit of noise around it. And, we always talk about, how much noise do you give it? A lot of our, even within the scanner, and I'm going to pull that up really quick. Even within the scanner, when you look at, I'm just showing the S&Ps right now. When you look at bottom, top, why does it say that? I mean, that says we're in the vicinity 10% of the height of the box, like a variance level there, a noise level, if you will. So that's kind of the area that I give it to just kind of, hey, it's just kind of swimming around these inflection points. Anytime it's breached, it kind of puts me in a whole different mode. But silver stayed within that area and really caught a good bounce. If you can look at these long-term profiles, they're really nice areas to play or pick battles around, excuse me. So that's the silver gold situation. Let's hit crude really quick. This is still the October contract. If anybody wants me to switch, I will, but that's what we have as the continuous contract still on silver. I mean, excuse me, on crude. So, here's the long term on the October contract. Didn't quite get down into that weekly unfair low at 41.12, but what I was focused on before last week, 44.85, kind of pierced that. And then you kind of get into no man's land down here a little bit. But how do you trade oil right now? I really don't see a lot of leverage here with oil. I mean, obviously it's looking at the dollar a little bit right now, but we're within a big fair auction on the weekly and daily, and I think you got better things to focus on. There is some decent news for long still on crude. You got a 240 appearing below price action, but that's kind of a short-term mechanism. Don't see a ton of ways to really knock the skin off the ball with oil right now. So new contract, these December contract on the 10-year, just incredibly supportive here. So it's amazing. We're going to talk a little bit more about the 10-year when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Take a look at Tesla. It's another reason to take a look at picking the battles around the inflection points here. We're in a downtrend without question. We've talked about this 2033 area being something to wait for on the top side a month and a half ago. That was nice, and now we've got a new profile here today, or yesterday actually. Here's the daily, that unfair high 207.24. Don't see any reasons to really turn the wrench any other way than the short side here, and you reached a high, yesterday at 206 and some change. Let me see if I can read that. 206.50, so the unfair high 207, and now we're down 6 or 7 points off of that. Looks like pre-market 199.60, so sinking even lower. So 198.96 or 199. Looks like we've already reached that this morning pre-market. It's going to be some place you can play defense on the long side, but I think you've got much better longs to mess around with here. I look at the scanner, and we talk about this all the time, but I just try to find things that are relatively strong or relatively weak. And if you kind of want to look at Tesla in that same light, you've got a relatively weak stock here, and it doesn't have a lot of market beta, I will admit, but again, you always want to try to wait patiently until the market comes to you, and Tesla patiently rallied up into 207 yesterday. Nice little trade. 10-year, we talked about that a little bit, just amazingly holding up well. Let's hit a couple other things we usually hit. Here's the dollar. Talked about some temporary targets were met around 96.24, and then you got to kind of wait and see what happens. Kept me out of trouble trying to figure out where to pick this thing on the long side. It's kind of in no man's land. Obviously, the ECB situation, not lowering rates, is driving some of the European currencies higher. We're going to take a look at that really quick. Here's the euro. Obviously, that 30-some% inverse relationship to the dollar. And here we go. So kind of in no man's land on the euro right now. I'm not a big fan of being long that product. If you watch this show, you know what I'm talking about. Here's the British pound. really talked about this thing defending 130.19 down here, edging higher. Talked about targets ultimately on the top of the profile on the weekly, which are usually explored. They're 136.81. Here's the daily on the British pound. You've got kind of intermediate support at 132.19. I know that's well below where we're at right now. 133.50 trading, printing right now. And you've kind of got to really look at the 240s here also. Kind of got some noise right there. So you want to, in my opinion, get back above 133.69, 133.70, start getting to some short-term closes above there, and then you're kind of off to the races again. But the 240s are a great way. We look at those also tremendously for some of the automated systems that we have that particular time frame. Bloomberg Consumer Confidence Index, which nobody cares about, is out at 945. Initial jobless at 830. Let's take a look at the yen trade. Again, highly relative to what's going on with the dollar. Talked about the 103.50, 152 area being targets on that bounce and had the close above. I actually got caught up in trying to buy that on the retracement at 130, 103.50, 152. And that, you know, again, you get stopped out, but you make these nice moves at times. So you keep your risk reward scenarios in line. And now you're coming down into these daily infra lows, kind of defending it a little bit here. I think the dollar is probably still a decent long trade, and you've got the yen sitting at intermediate support. So I wouldn't mind picking a battle again on the yen here for at least an intermediate pop. Aussie dollar has done quite well. Again, coming down into waiting patiently until we get down to these inflection points down below on the long side. We've talked about this, only trading it from the long side. You had a nice ramp up from 74.78 into those targets on the weekly there. Had to kind of sit tight, wait and see what happens in. Now you got the big support it hit last week, 74.78, and has really now met targets 76.89 and even better. So now you got to, in my opinion, got to kind of wait and see. Here's the daily. Again, closing above, come back and retesting. But I'm not super convinced that we're going to close above this week yet, so I'm just kind of waiting and seeing. I mean, I'd rather be long this instrument than short, and I'm blocking out the short side when it comes to the Aussie dollar. It's been a nice trade, really. It's been something to not rely on, I hate to say that, but nice little situation. All right, when we talk about the S&Ps, first of all, we're going to go into the internals here. I heavily rely on this for the long-term trade. I want to kind of figure out, where's the edge as far as what the internals are doing. This thing has really kept me from getting short in a big way at times, except when the internals tell me it's okay to start leveraging shorts against the index inflection points that we talk about all the time. Again, nothing looking terribly wrong here on the internals now, kind of long and strong. We're going to take a look at a couple of the bellwethers here, but when you look at the numbers right now, we've talked about this. There's not a lot of reasons to get short this instrument right now. Taking a look at a couple of bellwethers. Let's take a look at Apple. They've got the new iPhone 7 out, which really, does anybody need an upgrade to the iPhone? I don't think so. Here's the charts on Apple. This was another one kind of getting down into 105.47. A stock that broke out above this 98 area based on some of the reports that came out. And then you got the hint of a new profile. Then you've got, this is our long-term weekly. Then you get down into this area. We reached a low of 105.50. There's 105.47. This is not including pre-market trading. So again, another good example of waiting patiently until these inflection points are approached. If you have the scanner, you can get this on any stock out there. There's like 5,000 instruments in this thing. And I sometimes don't understand why we have all those different exchanges in there, because a lot of people just trade the U.S. and the some of the European and, some of the Asian. But, we've actually got South African here, Colombia, Brazil. And you can look at this here. Bursa Malaysia, very popular. just kidding. But has Australian ASX 200 in here. But you can come in here and really, really get down to the nitty gritty, do some analysis, find some opportunities. You can actually take a lot of these and combine them and find some global opportunities all at the same time by doing some custom sorts up here, manual sorts, or some custom sorts that we have. Breakdowns on the S&Ps. These are the stocks currently breaking down by way of profiles, which is kind of a nice, easy little sort. Kellogg. There we go. We're going to take a look at a couple of these when we come back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We're finishing up with Apple, looking at some breakdowns in the scanner here, but let's take a look at international business machines. Breakout again, folks. So 161.17 now looking supportive on IBM. I had an email about that one, and again, you know, not exactly making new highs here, but not the weakest stock in the world. Here's the S&Ps. So we talked about the breadth calculations before. Folks, this is I mean, if you're short here, you're extremely concerned. And, you know, I just think you got to block that side of the marketplace out. We haven't had this is our daily profiles that we're looking at. And I know we have 2191.50 on the weekly here on the September contract, and we reached a high of 2189 and some change. So we got there, we backed off a little bit, but, you know, this is one, I mean, do yourself a favor, you know, play the odds. I mean, the internals were looking good. You know, we've got a little bit of a DMZ up here, but not looking terribly scared. And if I'm short, I always try to put myself on the other side of the fence. And what would I be thinking if I'm short? I'm extremely concerned. So don't try to be a hero. It is what it is. Let's take a look at the bean trade here. We've tried to pay attention to this. And we talked about, you know, getting that close below, go back and retest. And this is an example of, you know, hey, okay, we got to take our medicine on the short side. We've crossed the 964, 965 area. That's okay. You've got it on a relatively wide profile. You've got a POC, which is the mode of the profile at 986.5 on the weekly, and you've also got 983 sitting here on the daily that we've kind of, you know, also got as resistance. So the bean trade, in my opinion, you still got to look at this from the short side. You've got a chance to short it again a little bit higher, see what happens. Stops above 986 based on your appetite for risk, and let's see if we can retrace at least back down to 964. Okay, let's hit December corn really quick. You know, I don't put a lot of fundamental slants into this. There's some great information that comes out in the den if you guys have access to it. If you don't, please find out how to get into the Tiger Den. A couple of guys in there put out some unbelievable fundamental news on some of the grains. Here's the December corn trade. Similar to November beans, kind of crossing that weekly unfair low border. Then you got to kind of take the medicine, sit tight. That 328, 330 area was breached. Now we've kind of, you know, edged up a little bit higher. What do you do with December corn? I am not a big fan of being long corn. I still think this trade's not over with. But again, you know, you got to sit tight right now. Here's the 240s on December corn. Just, you know, kind of had a change in pace here from around that 314 area. But again, you know, it's kind of a wait and see. I'm kind of blocking out the long side on December corn. All right, I want to pull up a couple of stocks here. PCLN, here we go. If anybody's got enough money in their account to buy shares of Priceline, you've been rewarded. And again, here's the weekly numbers. You got a price, you've got a profile appearing below price action this week, which is also bullish, and you're sitting on pretty much all-time highs here. Another good example of waiting until some of these long-term inflection points are approached. This is our weekly profiles down at 1160. But again, now you've got a weekly profile appearing below price action, which is extremely bullish in nature from this algorithm that we have. And you'll see that in the scanner if you have the scanner. But again, you know, block out the short side on this thing. Do not play around trying to be a hero shorting PCLN. Had an email about that too. Let's take a look at Google. Long-term on Google, this is nothing to play around with on the short side either. Here's the daily. Day before yesterday, closed above, go back and retest, and looks like we're at least going to get back into the 789, 790. McDonald's kind of got what we were hoping for finally on McDonald's, a rally back up into that 118.86 area, reached a high yesterday or the day before of 119.24. So got, you know, with less than 50 cents variance on getting back up into an area where we could pound this again on the short side. McDonald's, the free-range chicken thing's going to kill him. I'm just kidding. I admire him for that. Very nice situation. Let's take a look at Disney, another stock we've been following from the short side. And again, you know, we've talked about just something wrong here. Being able to block out the long side on this and just kind of continue to take breakdowns and rallies up into resistance on Disney. Again, you know, we go back to these stocks because sometimes these things are just the gift that keeps on giving until we're told differently on these things. Breakdowns, going back into the scanner. Let's take a look at General Mills here. This completely demolished the weekly unfair lows and the daily unfair lows here on General Mills GIS. And this is, you know, again, you can keep this sort. This is primarily focused on the weekly and daily, but you keep this sort up, it will notify you relative to this algorithm, real time, dynamically updating when these things are happening. So a nice little sort. I look at it a lot. A lot of times you can catch things that are breaking down on the weeklies and the dailies at the same time. And these are the ones that are kind of okay to get back in the water on the short side as far as, you know, relative to what the market's doing. You want to be short in weak stocks, in my opinion. Monster Beverage. Here's the daily. Here's the weekly. Now this one, you know, you're kind of getting the indication on the daily that we're breaking down, but you got kind of something bigger to contend with here, and actually decent support at 150.49. So that's probably one I'd say that the risk reward's really not there. Excuse me. Come on, screen. Kellogg. I like that General Mills trade a lot better. Let's take a look at some of the stocks in the downtrend section of the scanner. This is the S&Ps. It's good to be back at TFNN. Bristol Myers. We've talked about this one just, you know, again, you know, it not being over, finding inflection points, i.e. 59.95 latest, and then we've got a new profile here. We'll talk about this a little bit more when we come back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. We're looking at Bristol Myers, looking at some of the stocks in defined downtrend as far as some of the ways we look at things relative to profiles. And, you know, there's been some good opportunities on the short side in some of these instruments, but relative to what the index is doing, the S&Ps, and also looking at, you know, some of the long-term inflection points on the S&Ps, the breadth indicators that we look at. The reason I'm talking about this is it's much easier, in my opinion, to find candidates if you have a grudge against the S&Ps and just want to short it. Sometimes it's easier to drill down into the components and just find things that are showing themselves, well, at bare minimum, not wanting to be bought lately, and also not wanting to get through some of the resistance levels, in this case on the short side, that are presented, and being able to pick battles around those particular inflection points, put the stops in. Let's see what happens. If the S&Ps come off, hallelujah, that's great. It should drive a lot of these relatively weak stocks even lower. But if the S&Ps rally, you know, you're in a situation that hopefully is not going to be as painful as being short some strong stocks or short the S&Ps in general. Is it smarter just to find strong stocks to buy in a situation like this? I think you got to be a little bit balanced. You know, I mean, I think you got to, you know, look at the short side on some stocks and look at the long side. And people who do the pairs trade, I know that's not the theory behind doing pairs trading in general. It's trying to, you know, normalize things. These are stocks that don't really have any relevance in the sector or intra-sector trades, like, you know, looking at Bristol Myers relative to Abbott Labs or something like that, which probably is just completely blown out some pairs traders. But they should have been probably not messing around with that. But, you know, a lot of those guys who do pairs trades, they're trying to pick up pennies and nickels, and then all of a sudden they get whacked for $1. And then they got to use the rest, the next 4 months to try to scramble and get that back, doing some kind of mean reversion thing on pairs. I mean, I'm not a big fan of that concept, and I think that trade has kind of been played out. There's Disney on the short list again here on the downtrend side. There's Gilead Sciences. Let's take a look at this one. This is another one. I mean, yesterday, stock in a downtrend. Something's wrong with it. New profile, unfair highs. I mean, turn the rents the same way. It is what it is. These stocks, you know, let somebody else figure out where the bottom is. We talk about that all the time as far as trying to reverse some of these trades. I mean, you know, turn the rents the same way. It's a down stock. You got a new profile. You got a new resistance area. You got a new chance for this to rally back up into that area, and then, you know, do the whack-a-mole thing again. So Gilead Science, I know you might be thinking, oh, my God, these guys were the darling of the XLV world, blah, 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 blah. You know, it is what it is. And it's really raising his hand saying, there's something wrong with me. I'm giving you another chance to short me. Here's Tractor Supply. One of my favorite stores, actually. You always meet the coolest people in Tractor Supply, too. Well, what I consider cool people. 84.25 unfair lows on this particular thing. Here's the weekly. Kind of had the close below and then kind of off to the races on the long term. So it gives you some chance. Here's Tesla Motors in here. Here's United Health Group. Let's take a look at that one. Achi mama. Ooh. This thing had the break, huh? Finally, 138.88, and now we're in kind of a different scene here. So had the breakdown on the daily and the weekly, and now we also got new resistance areas, 136.02. Dollar Tree, and these are stocks that just changed tone relatively quick. And then you basically are blocking out the long side, which is the kind of the cool thing. I'm not looking at the den this morning. I hope you guys have not been putting out comments or questions. I'll review it really quick. Nothing. All right. This is another one, you know, if you set the scanner up real time on a custom sort, you're looking for bottoms, stocks that have, you know, kind of broken and rallied back up into it. This is similar to Tesla. Breakdown, kind of rally back up into it, try to pick another battle, 44.44 on Fastenal, things like that. You know, you can go into also this downtrend resistance. This is going to give you some candidates that are kind of happening like that. This Fastenal would have been in that updated dynamically. Darden Restaurants, let's take a look at this one, if it'll come up here. This is one that's, you know, obviously not been happy lately, but rallying back up into, and that's why it's on the list, just letting you take a view that we are getting up into resistance again, 63.20. Duke Energy. Yeah. That one's not the best candidate in the world. T. Rowe Price. This is one that has been on my short list for a while. And if you blow this up, you look at it on your charts, nothing happening here except a chance to short again, 69.37. Somebody's asking about IBM in the den. I think I looked at that earlier. I will look at it in just a second again. Whirlpool, WHR. This one, again, you know, might not be a bad little place to look at picking a battle here. You're rallying back up in, and this is why it's on the downtrend resistance. As it closed yesterday, and these dynamically update real time during the day, as it closed yesterday, we're sitting, and if you notice this, it says bottom and top. So we're kind of rallying back up into those dual time frame inflection points. This is our daily. Again, we had the break on the weekly, the close below. We're rallying back up into it. This might not be a bad little chance to put some stops in and see what happens, see if we can relax a little bit more off of those unfair lows. Let's take a look at IBM for the gentleman in the den, Captain Bob. So let's go into the scanner and let's just type it in, IBM, in the search function there. Here we go. It's popped up. So if you'll notice, this one means we're breaking out above daily profiles. This is yesterday's. This is pre-market right now, but the dailies and weeklies don't get their updates on the weeklies and dailies till the market opens. So yesterday we closed above again. We've been in an uptrend for 27 weeks. Here's the kind of yesterday's breakout. I think pre-market, where are we at here? I got my days mixed up. Is today September 8th? Got a free day coming back from Asia. Yes, it is. Here we go. So here's the weekly. Here's the daily. So right now, breakout again on IBM above 161.17. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, September 14th at 5 p.m., I'll be hosting a special 1-hour event, The Ultimate Reversal Patterns. I'll teach subscribers how to identify and trade market tops and bottoms. You'll learn Tom DeMark's TD Setup, TD Sequential, and TD Combo. Plus, I'll show you how to identify Gartley buy and sell patterns, which means you'll learn how to master the D point of any A to B equals CD pattern. More importantly, I'll teach you the most powerful pattern of all, by price relative strength divergent pattern. These patterns work for stocks, for ETFs, future contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes Wednesday's Ultimate Reversal Patterns webinar. This $49 offer is only good through September 14th, so act now. At only $49 for your first month, I guarantee this is an investment that you won't regret. For all the details of the upcoming workshop and to reserve your seat today, visit the front page of TFNN.com now.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. And we're taking a look at the Forex section, the scanner. I don't talk a lot about these pairs, you know, for instance, like the Aussie-Canadian cross, but we actually spend some server resources and therefore money in the cloud on being able to calculate all these for you. And I think worst case scenario, you're probably going to get an update every 60 to 90 seconds, but sometimes a lot sooner. Currencies trade like, I mean, it's madness. I'm showing the currency screen right now in the den, and these things, if you have ever been in the data business or number crunching business, you got to devote some serious energy to doing these calculations. They trade just insanely fast. So these particular instruments that I'm showing on the screen, we do some decent work here. If you guys are Forex traders, if there's some pairs not in here, I mean, here's the euro, for instance. I mean, the household kind of currency names. There's the British pound, USD cross. Feel free to send it in. There's the New Zealand USD cross, the ruble, you know, pound, yen cross. Feel free to send an email in. We'll get it in here. And we do put stocks in here based on, you know, things that are not actually in any of the indices. We've got an other section here that you can check and kind of see what's not in, some people have asked for that is not in a particular index, and we'll put it in the scanner so you guys can do some analysis. Just want to state that. All right. ETFs. What's the top of the heap here as far as breadth goes right now? Utilities. Let's take a look at that. Let's take a look at the XLU. And here we go. So again, notes and bonds looking, strong, long and strong right now. Getting above 49.37, closed back above. This is the XLU. A little bit of a noise area below there, but again, these are the weekly inflection points that you got to wait for a lot of times for these things to approach. Now you got the daily closing above on the daily and going back and retesting this. And if we miss some stocks that people have sent in, please remind me, because maybe we didn't get the email. Let's see here. And again, maybe that was an oversight. Tucker says we didn't get some of his stocks in, but I promise you we'll get them in today. I don't know if they got sent to the right email, or maybe I just overlooked them. I apologize for that. So the XLU, 49.88 coming back and retesting on the daily. I think this particular sector and some of the stocks in this sector can climb higher. I mean, these notes and bonds are just sitting on the launching pad, it seems, again, even with the S&Ps crowding the unfair highs. Okay, just to recap here, got about 10, 15 seconds. Gold, what do you do with it right now? I think you got to wait a couple of chats in between the show there. Closes above 1367 or pullbacks into 1331.33. Thanks, guys. Stay tuned for Larry.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.